Well, good morning. This is a happy Friday. Fridays are always a great day. I just wanted to touch base with a few changes this year. The CRA, the proposed tax changes have been crazy this year for small business owners and accountants. First, I want to say I hope everyone had a wonderful summer. For those that were leaving around the July 18th date when these new tax proposals came out, I have to honestly say that it probably wasn't a great vacation. I know for me, I actually left on that day, so it did disturb me a little bit, having to think through some of these changes that could have been. But we found out that a lot of them weren't as bad. There are some changes, though, that I am going to talk about. And then the next thing, the other thing I do want to talk about is Trudeau has announced that he's hired a bunch of auditors and that he's going to be auditing a lot of the small business deductions. So I just want to prepare some of you for that. So what are some of the changes? Well, as of July 18th, 2017, the two major changes for small business corporations would be no more income splitting. What does that mean? Well, in the past, sometimes income splitting for corporations would involve paying some family members that maybe weren't working in the corporation, or maybe they were, but their income wasn't at fair market value, which really, it's always been that unless they're working in the company and you were paying them the same as you would be paying somebody else, a fair market value rate, that's what was allowed. So they're just saying, okay, you can no longer pay any children or spouse unless they pass a reasonability test, basically that they work for you and are at fair market value. So you're still allowed to pay spouses and children if they're in the business. It's just you have to be very careful at how much you're paying them for the job that they're doing. Okay, so the second one is dividend sprinkling. So dividend sprinkling is where you used to pay out family members, whether it be a wife, children, husband. And what a lot of corporations used to do is they would pay out their children between the ages of 18 and 24 for education, for university. They would dividend to the child and then they would pay for their education. It was great for those who were able to do that, but because of the new reasonability test, you will no longer be able to do that, or spouse as well. I won't get into all the details yet. To be honest, there's a lot of things that need to be clarified still, but that's basically what the two new things will be moving forward. There are other things that have came from the proposed tax changes, but I'm not going to get into all of them quite yet. One of the major problems is that we really haven't got clarity on some of them. One is being the passive income. So in the past, you were allowed to have as much money as you wanted in your operating company, or you could move it up through dividend to a holding company and invest it. And there was never any thresholds on how much you're allowed to invest or make. That is changing. They're trying to make it where it's a $50,000 threshold of passive income, which would be about $1 million if you invested at 5%. But of course, there are a ton of questions coming from that. What about the money I've already had? Does it get grandfathered in? Is it per corporation? Is it per shareholder? Lots of questions unanswered. So we are hoping to get clarity on all those questions in the near future. Would be helpful for accountants so we can tax plan better. So let's get on the topic of the audits that are going to be coming out for small business. So let's see now. The major areas are going to be meals, automobile, travel, and professional fees. Those are some of the areas that I've seen. So meals, let's talk about meals. A lot of people's business owners, if you're driving to work and you decide you want to have a coffee and you go through drive-through, I can't tell you how many times we see Tim Hortons on a daily basis running through a meals expense account. That's not exactly what CRA is saying is a meals expense. So if you were to buy coffee for the entire company and all your staff, say in the morning, then that would be more of a meals expense. If you're having a meeting and you're buying, Timmy's and donuts and it was for a business meeting, that's okay. If you're taking out a client, a potential client, that's okay too. If you're buying gift cards and they are for meals, whether it be liquid like LCBO cards or any gift card where you can buy food, that is considered meals. So, and the reason I'm stressing meals separately is because it's only 50% allowed as a tax deduction. So you have to be very careful how you categorize things. The other area would be automobile. That's another highly audited area, deduction. The biggest problem there is people are not tracking their kilometers on a daily basis. So the government requires you to have a logbook. And there's different rules between sole proprietor and corporation. And what I mean by that is, yes, everyone still needs a logbook. Everyone still needs to have receipts as backup. But as a shareholder, I can actually ask to get reimbursed by kilometer from my corporation. But as a sole proprietor, I cannot do that. You have to go by original receipts, documents, your logbook, and whatever business percentage usage is, that there's this auto schedule on your business tax return, and that's what you have to use as a sole proprietor. But a logbook, you have to have one. And so many people don't think they need one. So that's an area that you definitely have to get more disciplined in. If there's actually a lot of applications you can use now. There's a QuickBooks self-employed mileage tracker. Actually, there's a lot of mileage tracker apps you can have on your phone to make it a lot easier for you. So try and get that auto logbook implemented for the 2018 tax year. The other area is, for meals. Going back to meals for a minute though, I just want to say there's a lot of information on the CRA website, and all you have to do is type in meals expense in the search, and it will give you a ton of scenarios, whether it be travel, whether it be conventions, conferences, things like that. If you are apparently a courier service where you're riding your bike, you get a little bit more meals as a deduction because they understand the job's a little tougher to be, packing a lunch and having a knapsack or a lunch bag, as you're driving your bicycle. So there's different things on the CRA website, and they have it laid out very nicely. So I really highly recommend. We are going to be putting some of those links on our website shortly, so it'll make it easier for you to be able to search some of these highly audited areas that are going to be audited. Another audited area is going to be professional fees. So make sure that when you are getting an invoice, whether it be from your accountant or lawyer or whatever it's for, that there is no personal element on that invoice. So for instance, I have seen in the past where the accountant will put, corporate tax and then also personal tax on the same invoice. That would be disallowed. That's an example. Legal fees, same thing. If you're getting some corporate restructuring done and there's a bunch of work that the lawyer is doing, just make sure that if it's some personal element to it, it's not on the same invoice. So make sure your professional fees have backup as well, and they are all business related. Okay, you cannot deduct personal professional fees through the corporation. Anyway, I hope that helps. I know it can get kind of tedious as to what you are and aren't allowed, which is for my clients, I would hope that they would call me. I would love to clarify for you. But if you don't have an accountant, by all means, give us a call. But really, you really need to understand that these business deductions are going to get picked on. So in order to have those auditors' hooks off your books, make sure your books are in good order, because that is a requirement from CRA. So thank you. Have a great day.